Welcome to College Smart Radio, helping you understand the true cost of college and tackle the runaway costs of financing a college education. College Smart Radio is hosted by Mark Guthrie and Beatrice Schultz, founders of Westface College Planning. Now, your hosts for College Smart Radio, Mark Guthrie and Beatrice Schultz.
Are you a business owner who is unlikely to qualify for need-based financial aid and you're wondering what strategies you could be implementing to reduce your financial burden? Many of our clients are in the same boat. For those families, strategic tax planning during the college years becomes critically important. Business owners and highly compensated professionals, such as doctors and lawyers, have some unique planning needs that require some out-of-the-box thinking during the college years. On today's College Smart Radio program, our guest, Jodi Eramo, is a tax advisor to tax advisors. She'll be joining us in our discussion of tax advantage college strategies. Hi, I'm Beatrice Schultz. Welcome to our weekly show, College Smart Radio. I'm here in the studio with my co-host, husband and partner, Mark Guthrie. Our show is about bringing up-to-date and practical advice to parents who are dealing with the cost of a college education for their kids. With some private schools costing well over $60,000 a year, a UC costing $35,000, and a California State University running $25,000, parents need more help than ever. We bring you that help by sharing ways to pay less, tapping into financial aid, and prioritizing your source of funds to make sure you get through the most expensive years of your life. Based on our education and experience, we share our insights with you week in and week out. Mark and I are the owners of the San Carlos-based college financial planning business, Westface College Planning. We're also the owners of Westface Financial Advisory, a registered investment advisory firm. We host workshops and webinars on college and financial planning and consult with parents on a daily basis. And in addition to our insights, we bring in experts in many areas of the college process, from counselors, financial professionals, financial aid officers, student coaches, parents, and even students. You'll learn firsthand the ins and outs of how to pay for college and survive financially. In addition to our show, you can find lots of powerful information at our website, collegesmartradio.com. We have many articles with up-to-date information on navigating the waters of paying for the runaway costs of college. We also have a monthly e-newsletter full of content about college planning, and we have a link to our free community parent workshops and webinars that we host to teach parents about how to pay for college and how the financial aid system really works. So let's get into today's show. Many of the families Westface College Planning works with don't qualify for need-based financial aid. As a result, strategic tax planning during the college years becomes critically important. Parents who are small business owners have additional college funding tools available to them that many other families don't have. Implementing a tax advantage college plan can help these families fund college education for their children in a way that reduces their overall income taxes. Many CPAs are up to their eyeballs in income tax rules and regulations, and they haven't taken the time to learn how to integrate the financial aid system, education tax credits, and income and asset shifting to unlock cash flow during those college years. Westface College Planning has partnered with Jodi Eramo to offer a service we call Tax Advantage College Strategies. We create a blueprint for your tax advisors to guide them in redirecting money from the IRS to help fund your college tuition bill. Jodi Eramo, a CPA, is with us today on the show. Jodi has many years of experience in the financial service industry. She has an accounting degree from Ohio State University and a diverse professional background that includes public accounting, small business consulting, tax preparation and planning, financial planning, and even federal employees benefit consulting. Most recently, Jodi works for Summit Financial and Summit College Funding and has expanded her services to include tax advantage college planning for small business owners. Jodi lives in Loveland, Ohio, and she's joining us from Ohio. Hi, Jodi. Welcome to College Smart Radio.
Hi, Beatrice. Hi, Mark. Thanks for having me.
Well, thanks so much for joining us, and we appreciate your expertise when we talk a little bit about tax advantage college strategies. I think the first thing that we always like to talk about before we go right into tax advantage strategies is how to identify whether you, as a client or parents that are listening and business owners on the phone, should even think about this strategy. First, right. So why don't you go ahead and kind of give us that qualification?
Right. Well, first of all, a family is going to want to make absolutely certain that they are not going to qualify for need-based financial aid. I would encourage you there to seek out a professional if you're not sure. Families think they won't qualify for financial aid when in fact they will. So step one in the process is, do I or do I not qualify for need-based financial aid. If you do not, and if you own a business, you would be a good candidate for a tax-advantaged college plan.
Great. So that kind of sets the stage here a little bit. We've got parents who are going to qualify for financial aid, and they're obviously going to want to pursue all their opportunities there. Then we have parents who aren't going to qualify for financial aid, and some of those parents might be very high income earners, might be parents with substantial assets, but they might not own their own business. Therefore, this show isn't really targeted to that group of parents. This show is targeted to parents who will not qualify for need-based financial aid and do own some type of business that they've got a controlling interest in. So is that fair?
That is exactly right, because unfortunately, people who are just high earners and are just paid on a W-2, there's not a lot we can do to help those families.
All right, so for all those high-tech executives we have here in the Bay Area, sorry, we don't have tax strategies for you today, but frankly, you probably don't need them. That's probably not your biggest concern. Okay, well, let's talk about these strategies, and we've done some summarizing here and kind of identified 4 key strategies. Now, we're talking about the United States tax code. So nothing we say here should be considered tax advice, just general discussion about things we've been able to help clients with in order to improve their tax position. And that is in 4 categories. Number 1 has to do with a child working for the business in the area of payroll. Number 2 is in the area of a gift being given from the parents or the business to the child and leased back to the business. We'll go into these in detail. Number 3 is a gift to a child of an asset, and the child sells the asset, generating some money, which is always good. And number 4 is the parents at their business setting up an education assistant plan at work. Jodi, how in the world did you come up with these techniques?
Well, we came up with them because we've simply had families coming into our office saying, we get the whole financial aid thing. We're not going to qualify. What can you do to help us? And every accountant is aware of everything that you just said. All 4 of those things, accountants would be familiar with what those things are. But because I have college planning background as well, I was just kind of able to see how those 2 areas melded together in a way that could, we could use the tax code really to help families pay less for college.
Sure. So not only do you have to know everything about the college planning process, you have to know everything about small business and everything about tax code, kids, and college. Okay. I understand why there aren't very many of you in the country. and we're very fortunate to have you with us. Okay, let's talk about the first one here. Let's talk about this concept of payroll, where a child would be employed by the business, paid money for the work that they do for the business. Why? What's good about that, other than the fact that maybe you get your kid off the couch or away from the video console and get them working a little bit? How does that help from a tax perspective?
Well, from a tax perspective, what it does is it shifts income from mom and dad's higher tax bracket down to their child, the student, down to their lower tax bracket. So it eases mom and dad's tax burden because they've been able to put their kid on the payroll. Now their business expenses are higher, their income is lower, which lowers their tax. Then the student reports whatever mom and dad paid them on their tax return, and they pay the tax on it at a lower tax rate. In addition to that, it opens up the door for the student now to have the opportunity to take advantage of the education tax benefits that mom and dad are probably phased out of. Anybody that makes too much money to qualify for need-based financial aid probably also makes too much money to be able to take advantage of those benefits. So by shifting earned income down to the student, now the student can take advantage of those benefits that mom and dad were phased out of.
Okay, so that could be a kind of a 2-for-1 deal here. So if, for example, parents paid their students $10,000, let's just use a round number here, and let's say they get to enjoy living in California with a marginal tax bracket somewhere around 50%. If the parents made that $10,000, they'd keep 5 and give 5 to the feds and the state, right?
That's exactly right.
But now when they pay their student $10,000, the parents now deduct that as a business expense because they're getting labor in return. and then the child would have that, and if that's their only income, their taxes total wouldn't be more than a couple $100 probably on that $10,000.
And then again, whatever tax they do have, we use those education tax benefits to knock that down to zero. So the child will actually end up not paying any tax at all. The best education tax benefit right now is called the American Opportunity Tax Credit, which is a $2,500 credit on your tax return. That's a big chunk of money to leave on the table. Again, mom and dad can't take it. The kids certainly can.
Sure. So it would be reasonable. You've seen parents be able to do this to the tune of $10,000, $20,000, maybe even $30,000 a year. Is that kind of the magnitude that we're talking?
There are, as with anything when we're talking about taxes, there are obviously IRS rules involved with such a strategy. There are rules about when you employ your own family member in your business, and so anybody who would consider such a strategy would certainly want to familiarize themselves with what those rules say, so that you make sure it's a perfectly legal, legitimate strategy, but you do have rules that you have to follow. So make sure you know what they are. Sure,
we're not going to recommend anybody kind of wade into Quicken and QuickBooks and try to figure this out themselves. They're going to need a pro to help them. All right, hey, we're going to take a quick break.
And if you've just joined us, our guest on today's College Smart Radio show is Jodi Eramo, who's a CPA and an expert on tax advantage college strategies. We've been discussing tax advantage college strategies. We'll be right back after a quick break.
College Smart Radio with Mark Guthrie and Beatrice Schultz continues in moments on AM 1220 KDOW. For more information on today's topic, visit collegesmartradio.com or call area code 650-587-1559. Contact our hosts at collegesmartradio.com or call 650-587-1559. Now back to College Smart Radio with Mark Guthrie and Beatrice Schultz on AM 1220 KDOW.
Welcome back to College Smart Radio, where we help you tackle the runaway costs of college. I'm Beatrice Schultz. I'm here with my co-host, Mark Guthrie. We all know that college is expensive and will most likely be some of the most costly years for a family. Understanding how to navigate the college costs is a smart thing to know. To help families be on this radio show, we host community workshops live and via webinar several times a month that explain the costs of various colleges, how the financial and tax system works, and things to consider to prepare yourself for this tremendous expense. To learn more and reserve your seat, go to my website, collegesmartradio.com. If you've just joined us, we've been talking with our guest, Jodi Eramo, about tax advantage college strategies. And we had talked about the first technique that can be considered, which is income shifting, or shifting income from the parents' income tax bracket to the students. And then, Mark, go ahead. Let's go on to the second technique.
Great. So let's talk about some assets here. We named the four of them. Number one had to do with payroll. Number two had to do with a gift and lease back. Number three was gift and sale. Number four was an education. Let's talk some assets here for a minute, Jodi. So let's talk about number two on our list, which is gifting an asset to a child and then having that child lease it back to the parents. Walk us through that a little bit, how that works, what the advantages can be, and then some of the conditions that need to be met to make that okay with the IRS.
Yeah, again, the IRS is going to definitely want to be involved in that. There are rules on how you value the equipment, on who maintains control of the equipment. That's typically involves a trust agreement, so you're definitely going to want to involve an attorney in such a plan. But I can just say, just to broad brush how it works, it's as simple as that. The parents would gift the equipment to the child. Again, because they're constrained by gift tax limits, there may or may not be a gift tax requirement involved in that. And then they lease it back from the kids. So what that does is that gives them a deductible business expense. It's lease income this time rather than wage expense, like the payroll strategy. And then the child on their tax return claims the rental income. So in that way, we've shifted that money, that earnings from the parents' tax return down to the kid's tax return, which we would certainly think the kid would be in a lower tax bracket than mom and dad.
All right, so a practical way might be if you had a dentist who had a large piece of capital equipment, let's say, for making, I don't know, crowns or something like that. That was a fairly expensive machine.
Absolutely. Dentists, doctors, restaurants, construction businesses, it would have to be some kind of a business where they had equipment of some sort, business equipment.
Okay, so they gift that to the child. The child now has that as an asset, and that transaction has to go through the whole gift exclusion and gift and all that, all those rules.
Right.
But the essence of it is, and the child now owns that asset. Now, does the child have to be over 18 to receive that?
They do not. I believe the cutoff is age 14.
Okay. So if they're in high school or early in college, something like that, they could receive this gift, and then it would be some commercially reasonable terms that they would charge back the business for the lease of that property. Is that correct?
That's right. And that lease arrangement has to be similar to what the parents could put together in an arm's length transaction with an unrelated party.
Sure. Makes sense. And then the child would then be receiving these lease payments, which of course would be generated from the parents' income in effect, right? Because they're gonna move that money over to the child. Child gets it. It's income for the child. I understand it's a little different than wages, but nonetheless, it's income for the child. And once again, a lower tax rate could come into play, but there's provisions there, of course, that make that all have to work. But that is the essence of that strategy.
Absolutely. Yep.
Great. So let's go to number 3. Let's go to gifting an asset that has appreciated. So here I think the strategy is we're going to gift an asset that's appreciated. The child's going to sell that asset, and that transaction will be more favorable to the family than if the parent sold the asset. Is that it? And can you kind of walk us through that a little bit?
That is exactly. And let's clarify, when we're talking about assets in this sense, Mark, usually we're talking about stocks or other investments that the parents own that are currently in their name. So let's say they bought the stock, 20 years ago at $10 a share. Now it's appreciated to 90. When they sell it, they're going to have, they're going to be capital gains involved. If they can gift that asset to their children and have the kids sell that asset and report those gains on their tax return, they're going to pay. Right now, capital gains for the 2 lowest tax brackets is 0%. So that's why we would do such a strategy there. Okay.
Now, in both of these strategies, let me just kind of probe this a little longer term. So now I've got my 18-year-old. I've gifted them either a big chunk of equipment from my business, or I've gifted them some appreciated assets. And now the child's got the money. Do we ever get it back, or is that kind of we've just pre-gifted some stuff to the child? Is this kind of a one-way strategy here?
Well, it is a one-way strategy. The thought process behind it, Mark, is that whatever income results to the kids and whatever income they're reporting on their tax return, that's the money that's used to pay the college bill.
I see. Okay.
That's how that goes.
So it's you've seen this we're talking theory here, of course, but you've seen this in practice, and the proportion of this tends to be around the tuitional cost of what's going on at the time that the child's going to school.
That's right.
Okay. So we're not gonna just, win the tax battle and lose the, I don't have any more money war because I gave everything to my kid. We're doing it all in proportion to college expenses, and it's all about kind of managing that phase of their lives.
Absolutely.
Great.
Okay, so we talked about the 4 techniques as examples, and there's going to be different techniques that are going to work for different businesses. We talked about the income, the gift lease back, and then the gift and asset to sell. The 4th technique we haven't talked about in detail is setting up an education assistance plan at work. Jodi, can you tell me how that works?
Yeah, Beatrice, before we go on to that 4th strategy, I do want to tag on a disclaimer to the 3rd strategy. Those of your listeners today who are familiar with the kiddie tax rules might be thinking, well, how could we possibly do an asset gift strategy without being constrained by the kiddie tax rules? And I will tell you, without getting into the details of it, that's part of the strategy. There are other things that we would do first to be able to to get you around those kiddie tax rules, because in general you are constrained by them. So that third strategy would involve, first implementing a plan to get you around those kiddie tax rules.
Yeah, thanks for qualifying that. That's true. We didn't mention that. So for some families, there would be strategies to get around that kiddie tax rule.
Absolutely.
Okay, so tell us a little bit about examples of education assistance plans that employees have set up that help out their students.
Well, the way that works is employer education assistance programs say that a business can set up such a program, and they can pay each one of their employees $5,250 per tax year and deduct that as a deductible business expense. It would be considered an employee benefit expense. And the first $5,250 per person does not have to be claimed as income by the recipient. Now, that just sounds all well and good. Again, it's a little bit more difficult than what we're making it sound today. There are rules with setting up such a plan, and there are rules that govern who can participate in such a plan. And again, the strategies that we go into help you navigate through all those constraints.
Sure, and we don't need to go into too much detail, but for example, if you offer a program to your employees, it has to be available for all your employees. So if you have some employees you don't want to be paying for their education, you wouldn't want to put that in place. And then the other example, I guess, is that you do need to be 21 in order to take advantage of a plan like this. Are those two of the examples you were thinking of?
Those are two, yeah. And so, obviously for somebody who has a mature workforce, or in some cases, a lot of times I see the case where mom and dad own the business and they don't have any employees, so their child would be actually their only employee. And, there's a cost involved, too, of setting up a plan. So for people who have multiple children, it can really, the savings can really add up. It's definitely worth doing.
Great. Hey, we've just got a couple minutes left, so let's bring some proportion to it. So as you've worked with families across the country in these techniques, your typical, just kind of give our audience a bit of a feel for it. So our typical small business owner making $750,000 a year, $750,000 a year in taxable income. If these strategies come into play without getting into the details, can this generate a couple $1,000s of advantage per year? Can it generate more than 10, 20, 30? What's just proportionally, what does it feel like for one student and one parent's kind of lining up their situations to take advantage of these of the rules?
Well, it's hard to just throw a number out there that everybody's going to be like, oh, I want to do that, I want to save that amount. It's going to be different by family. But for example, I just did one for a tax return last week. Their AGI, their adjusted gross income, the sum of all the earnings they made that year, was about $400,000. And just by we did a payroll strategy for this family. Mm-hmm. Just by paying the student $12,000, we were able to save that family $4,200 per year. And they have more than one child. So when we talk about that number in the aggregate, it's definitely worth doing and definitely something that people want to look into.
Wow. Okay. That's great. So it could be a couple $1,000s or more. It really depends. So that's fantastic. If that doesn't motivate somebody to learn a little bit more, I don't know what does. So.
Well, thanks so much for joining us today, Jodi. Really appreciate your expertise on our show.
Well, thank you so much for having me, because I am so passionate about this program, as you know, firsthand. I just think it's so great. High earners, just, it seems like every loophole they've had has been taken away from them. So this gives them a really good strategy that they can implement and help out with their college planning.
Well, thanks so much, Jodi. And that wraps up another weekly show of College Smart Radio. Thanks for tuning in. We look forward to sharing more helpful information with you next week.
You've been listening to College Smart Radio with Mark Guthrie and Beatrice Schultz. If you have questions on today's topic, log on to collegesmartradio.com or call area code 650-587-1559. That's 650-587-1559. And join us next week at this time for another edition of College Smart Radio on AM 1220 KDOW.
Information presented during today's show is not to be construed as advice meeting the particular needs of any investor. All mention of performance is based on historical experience. It should not be assumed that past performance is any indication of future results. Tax Center legal advice is not offered by Mark Guthrie or Beatrice Schultz. Please consult your tax professional for additional guidance regarding tax-related matters. Mark Guthrie and Beatrice Schultz are owners and investor advisor representatives of Westface Financial Advisory. College planning services offered through Westface College Planning. Insurance services offered through Westface Financial and Insurance Services. License number OF 35251. Financial planning and investment advisory services offered through Westface Financial Advisory.